Well, joining us to discuss this matter this morning is Mr. Paul Alaje, who is an economist. Thank you so much for joining us this morning.
Thank you so very much for having me. A beautiful morning to you, man.
Thank you so much, Mr. Paul Alaje. Well, looking at what we're seeing right now, it does appear that this is some bright news to report. But for a number of Nigerians, they'll still be wondering where exactly is this blue sky that we ought to be looking at. What exactly would you say has contributed to the decrease that we're currently seeing in inflation rate?
Thank you once again. I think stability of exchange rates is one of the major contributors to the current inflation rate that we have seen. Inflation has ceased from what it used to be as of the July inflation number, which was 21.88%. As we speak now, according to the National Bureau of Statistics, it eased to 20.12%. What seems to be consistent, according to the Bureau of Statistics, is that food inflation has eased. We have also seen month-on-month inflation is now around 0.74%. So Bureau of Statistics is saying that rural inflation eased, urban inflation also eased. So what the report is saying is that the rate of increase in prices has reduced. That is the rate of increase. That is, it's still increasing, but the rate at which it increases has reduced. It's not increasing the way it increased this time last year. So as we speak, from the Bureau of Statistics report, inflation number has now reduced. It has reduced in its increase to 20.12% year on year.
Indeed. I mean, you've mentioned forex stability. We also understand that the harvest season is contributing to the stability that we're currently witnessing. But how is that really translating for the ordinary Nigerian? Because for them, it does appear that every time they go to the market, apart from a few items, quite a number of things still seem to be on the increase.
Well, a number of factors here. We can look at cost of living and household consumption. Food inflation, if you look at it, according to Bureau of Statistics, is one of the things that is relatively, and the accounts they are looking at is rice and local grain. I have seen in the media that I've been informed that price of rice is 50,000 naira per bag. Well, I don't know what that person is saying, but to leave politics out of this, there might have been relative reduction in some food items, but not in the volume that some persons have mentioned it in the media. That may have some political coloration. So, but generally, household item is still quite high. And that is why inflation is not saying that food inflation is a single digit. It's still a double digit, which is still relatively high, but it's an improved inflation number compared to what Bureau of Statistics reported. But there is a mix I would discuss if I have time. Then you can also see that there is slight reduction in rural-urban inflation, even though rural inflation remains relatively higher than urban inflation for the year reported by Bureau of Statistics. You can also check what the impact will be. The impact on social and political implication. Most Nigerians may be saying all these conversations that economists are having in local language in this part of the country, they may call it Dogon Turunchi. That's BB grammar. That's what you people are saying, because there seems to be that disconnect from what they thought it would be and what they are seeing right now. But you see, when inflation numbers are reported, if government persists in making the environment relatively easy for people, then people will start feeling the impact. But the immediate, the impact may not be felt. And you can also see that in the coming period, monetary policy may respond. What will be the response of monetary policy? What many have been advocating for is reduce the rate. 27.5% of MPR is high. So bring the rate down. That is what many people, in fact, many economists are also saying that. But what I need many to understand, I support rate reduction. However, we have to do this with a lot of caution. What is the caution? It's too early to start celebrating reduced inflation, even though it's fifth consecutive reduction. But what we need to understand that what is the beginning of this reduction? It is base year adjustment and basket adjustment to 10% off from inflation numbers from 34 to 24%. That in itself was not a natural reduction. However, from that adjustment, we saw one increase or two, and after which we have seen consistent reduction now for about 5 months. Because of that, monetary authority, even if wants to reduce, must be cautious. And my advice is wait until you see year on year. And if you are not going to wait until you see year on year, you might need to be very, very careful in the kind of reduction that we will see. If reduction is sporadic, we might see inflation rebound, and it might go back to even a much higher inflation. Why? Because central bank is trying to control money supply in the system. And I have said that money supply is not the only major factor that drives inflation. And for those that may not know, beyond economic theory, factors that are monetary factors that are driving inflation, there are non-monetary factors that are driving inflation. Central bank is trying to manage all monetary factors, but non-monetary factors that are driving inflation are also as significant. And we need to be careful, because pre-election year always for Nigeria economy with high liquidity. Who are the drivers of this liquidity? Unfortunately and sadly, it's not going to be market players, it's going to be politicians.
Indeed. So you are not in support of a reduction in MPR as we currently speak. You think that there needs to be a lot of caution exercised in that regard. But for a number of people, they would like to see this trend continue, this trend in the reduction of inflation numbers. What do you think needs to happen for us to continue to consistently see this decline in inflation increase?
A number of things we need to combat insecurity, especially in food producing zones, so that food inflation can continue to have impact on headline in overall inflation or headline inflation. When food inflation reduces significantly, we will all feel the effect. Why? Because food inflation is the main driver of headline inflation in Nigeria. Number two, we also need to ensure that we slow down on imports, support local manufacturers to produce things that can be readily available in Nigeria, and we also patronize the same. Quickly, exchange rate is a major key factor when it comes to currency. Central bank has since reverted to manage flows, and we are seeing the impact. I remember that I had a conversation, I think, with your colleague on an earlier show 2 years ago, and when I was asked what was my recommendation regarding what government should do, and I said, see, we must go back to managed flow, not in the manner it was done in the previous administration, but in a different manner. And I'm happy that that managed flow is what we are seeing today. We are able to cover our 10 months import cover to assure that, which means we can have this exchange rate being consistent around 1,500 to 1,600. That range is still manageable. In the parallel market is around 1,520, 1,530, which is still really manageable until we can do more action and bring this down. So food inflation is very key for us to manage. The exchange rate is also a key factor, ensuring we have local manufacturing. All of these that I've said, they are momentary solutions. They are temporal solutions. The real solution will come when we're able to generate larger proportion of electricity. And we are not just saying we want electricity because we just want to see bulb come up, but we are able to convert this to industrial capacity. Some nations, when they see 6% inflation, they are already in problem. Nigeria is able to cope with 18-20% inflation. Why? Because manufacturing sector is immortal. We need to move away from a nation that depends so highly on imports to a nation that is able to produce and give what it has produced to the rest of the world. And I think this is how Nigeria will go going forward. Now that we're having a lot of signs of market or pure market system, in our economy. In the last 2 years, the signs of high pure market economy indices are very high, higher than I've seen in recent history in Nigeria. But what we must also do to make this pure market system work is that the work component of pure market is manufacturing, is production, is high level of interdependency and sovereignty. In terms of economic sovereignty is what Nigeria must embrace. And I hope that we'll see this in the coming period. So to really solve this problem and not to find ourselves back in the wilderness of Egypt anytime soon, it will be to deliberately formulate policy and see this policy through for production, for manufacturing, and certainly growth in Nigeria.
Well, I know Ayo has questions for you. Ayo.
Thank you, Markwe. You know, I'm going to revolve around the same issue, Mr. Alaje. And forgive me, for the longest time, it has bothered me that a significant chunk or percentage of inflation rate in Nigeria is due to the exchange rate. And it's a little, you know, burdensome, and it's concerning. I don't know if you want to educate us on how significant the impact is. You've listed two major things. You've listed inflation, the exchange rate as a significant factor. You've listed food inflation as a significant factor, which is, of course, perhaps a subject of infrastructure and all. You've also listed the issue of energy availability. Now, how can we escape this inflation rate in our country being influenced by exchange rate? Will it help if we're able to ramp up production and exports? And what's holding us down from doing that?
If I hear your question, because when you started, I really didn't hear so much of what you were saying. But it's like I heard when you mentioned the impact of exchange rate and infrastructure. I don't know if I'm correct.
Well, if you can hear me better now, I'm concerned that inflation rate in our country is influenced largely by the exchange rate. Can we escape that?
Exactly.
So one, how? Secondly, is it a function of production and exports? If those are the factors, what's holding us down from ramping up production and export?
Thank you. You asked a very lovely question, and I think you partly answered your own question. Inflation is largely driven by exchange rate, and it's not just Nigeria. It's a reality for nations that are not producing enough. You can even see your exports is higher than your import. We now ask, what are you exporting? What are we exporting largely? We heard that we're exporting some non-oil items, and we're exporting crude oil. But please, I want many of us to pick the trade report from the National Bureau of Statistics. That is where the real gist is. Nigeria still imports, I think as of 2 years ago, as much as nearly £1 trillion for antibiotics. Not for everything, just antibiotics. You know, as high as 2 trillion, I mean 1 trillion naira. That is what we.
Oh dear. Well, I'm hoping that we'll have Mr. Alaje back, because that is, you know, if inflation is largely driven by exchange rate to the naira, the dollar to the naira, is there a chance that we can benchmark our economy against another currency? That's one. Secondly, what's the role for states in all of this conversation we're having? Is there a place? Mr. Alaje, are you back with us?
I am fully back with you. I'm so sorry. I think the network had an issue. So
I think you have significantly answered that question. So two things again. Number one, is it a problem that we benchmark only against the dollar as against perhaps even the yen that we try to have a kind of currency swap with over time? The second question I'd like to ask you is there a place for states? Because most of the time when we're talking about all this inflation rate and all, we're talking only about the activities of the federal government. Is there something the states themselves can do to help, to ameliorate, to reduce this inflation rate themselves? If the states are able to, as you said, increase energy supplies through electricity supply in the states and ramp up production, particularly agricultural products in their states, maybe we can produce more, reduce food inflation, and then we'll have a slower, if not eradicate totally, the inflation rate. What are your thoughts?
That's a major role to play. I don't want to say most of the roles to play, because most of the people are in states. And what they need to do is to ensure we have high agro output. Another thing they must do is to ensure that we connect our various farms, farm settlement, farm areas to consumption or market centers. That will really help. Why? Because one of the factors driving inflation really high is when farmers had output, how will they convey this to the markets? Because where Bureau of Statistics is picking the numbers from, that's the survey from, is not from the farms, is actually from the market. So the cost of transport is really high from farm to the market. But when we have alternative, and that is why I think, and I've continued to advocate that different states needs to partner with the Nigeria Railway Corporation to help them, in making rail connection viable in their place. I've been to a number of interesting states, and I think that the federal government will need to also play a role from the north central to southeast to southwest to northeast to northwest. We need to see that as something very important. If we don't, we're still going to have high inflation. Recall that anytime there is a global shock, the impact on Nigeria is really high. Why? Because our dependency on global economy is really high. So we must create a relatively independent, not absolutely independent, but relatively independent domestic economy that can help us as a nation and protect us out of global economic shocks. So I think state has key role to play beyond just allocation and paying salaries, but in terms of infrastructure and creating environment for output and production to grow. If we don't, I'm sorry, it's a matter of time, inflation may rebound again.
Well, we hope that would not be very soon, especially given the fact that states are now getting more money. Just yesterday, we understand that from the FAC, over 2 trillion naira was shared between the federal government and states. Revenue hitting as much as 2 trillion naira, the first in a very long time. So yesterday was also a historic date in terms of allocations being given to state. But we have to thank you very much for sharing your thoughts this morning with us. Mr. Paul Alaje is an economist. Thank you once more.
Thank you so very much for having me.